Okay, let me share my screen. What are the things that you're struggling with the most?
Um, the one thing that you talk about the hourly, I thought I got it a couple days ago. It's just you you just trade off your 4 hour bias and you find your momentum on the 1 hour, right?
Yeah, 1 hour, 15 minute, um, etc. Yeah. Um, where's the struggle at? Is the struggle like with the 4 hour time frame, the 1 hour time frame?
The 1 hour time frame. I never use the 1 hour, so it's like
Oh,
I'm so used to using the 15.
yeah, the 1 hour is huge because this is why it's so big because so so if we're trading the morning, if we're trading the morning at like the time that like my time 6 a.m. So 4 hour candle. So what's important about this candle, the 4 hour candle is you've got 6 a.m., 7 a.m., 8 a.m., 9 a.m. Then the next one, 10 a.m., is new 4 hour candle. So what's really important about the 4 hour candle is you have four 1 hour candles in between, right? Because every candle represents the time frame we're on. So when we're at 4 hour, for example, you see 4 hour here, for example. So in this time frame, right, this was a news spike. So price was this green didn't look like this until after the news hit. So it was like right here around this area. Then all of a sudden news hits and boom, it spikes up.
Right.
But then so okay, so now we've got the new six. Now we have the new 4 hour candle, right? So what goes up must come down. But if you didn't know, you just drop down and let's see what the 1 hour did. So here's from six. My little trick that I've been going over in my um, recent webinars online. This is my little trick because I don't. What are you trade? What time are you actually trading at?
Right now it's just whenever I can get on the chart.
Okay, so
Yeah.
so most importantly, we have to work on also schedule for trading because my trick in the morning is if 6 a.m. doesn't have clear momentum, usually by 7 a.m. we do. The way that looks is like this. So we've got here's the 5 a.m. So right around this time, like in the 5:30 range, we had news. Boom, news spikes. Okay, now we've got news. So now we hop down and we say, well, if we don't know exactly where prices go, if we're not comfortable, for example, selling resistance, let me move it down though still. We look left, left, left. Also, I want to draw up zones, and I want to show you how to draw up better zones. Possibly that will help you significantly. So when we have, if 6 a.m. doesn't have clear momentum, usually by 7 a.m. we do. This is what it looks like. So here's 6 a.m. So 6 a.m. ended up coming all the way down here, and it pulled up, and it left us off with the wick to go fill.
Right.
Right? So usually right by 7 a.m., we do have that clear momentum. So it's like, okay, well, if I didn't know what to do in that hour, let's just see what the 1 hour looked like afterwards. And you can see, you just follow the momentum, right? Because you can see how we come up, we hit a resistance. Now we're continuing down. The 4 hour time frame would have been looking just like a little bearish right here, right? It would have been looking just a little bit bearish. The 15-minute time frame gave it away. So with the 15-minute time frame, we end up having higher high. Price hits, news hits, it comes it hits a major zone. And what's really important is already having zones drawn up ahead of time.
Yep.
So you really want to have your zones drawn up ahead of time. So let me go to the daily real quick. We got to have our zones drawn up. Just look left. We got to be able to identify zones. We just look left. We see, okay, well, price has been here a few times recently. If you draw it up, it'll go across the whole screen and it'll touch a group of times. All right, let's look at the bottom of here. There's another zone. There's another nice zone. This is just daily. Now let's go to the 4 hour. Okay, so the 4 hour. We got other zones by looking left. So now we got a better idea of an area price wants to be. We'll go to the hour time frame, and then you get to see the zones a little bit better. So the way you plan your attack, for example, news was at 5:30. So what did news do? News launched price up. What did it do? It hit a resistance. It actually hit a major resistance. This was a major resistance on the 4 hour time frame, etc. This is a big resistance here. Price launched up 50 something pips. Before price goes up any further, it's probably going to make a pullback. So either it's going to make a higher low to keep going up, right? But we're in a clear downtrend. We're clearly in a downtrend. So understanding that when we're trading news or we're just trading in general, having your higher time frame zones drawn up, that way you can say, okay, if price comes up here, this is something that I'm going to look for and I'm going to do. If price comes up here, this is something I'm going to look for and then I'm going to do, right? And then so if you're used to the 15-minute time frame, even on the 15-minute time frame, we've got our highest high now. This is our highest high. And then if you're trading with EMAs, I don't know if you're using the 14 and the 15 EMA, but if you are,
Just use the 14.
okay, cool. So if you're using, when price is like this far away, the reason why I like to add the 14 and the 50 is just because then it gives me like two to get an idea of, just a more solid idea of momentum, etc. But when you're this far away from the EMA, it's going to act as a magnet. So we've got a couple things. We got after news, so we've got post news, 14 EMA magnet. That's a big deal. So we know we're super far away. Price hit major resistance. My eyes are still got little crusties in them.
Yeah.
Why is this spelled wrong? Resistance. There we go. Price hit our major resistance, and well, now we have volume because news. All right. So we've got a few major things going on. So now what we look for is we look for either we're selling resistance or we're waiting for more confirm. So, like I like to trade right at 6 a.m. So news hits a major resistance. As soon as price comes here and closes off, just like this, I'm already looking to take sell entries because we have such a strong rejection. Usually when we have this strong of pushes, I can show you like a little, let's see if we have like a little back test. So we've got, like this is strong rejection, pulls down, it's going to continue going down in that direction. Strong pull down, goes down in that direction. We hit a major resistance, strong rejection, because in this candle had, that's 14 pips already just in this candle from going up and then closing down. Then you just follow momentum. However, if you are not comfortable and you don't have the clear momentum, this is where waiting comes in. Because then we've got a low now. And what time is this at? This is only 6:15 a.m. Just by 6:15. By 6:45, we have our first lower high. for a 2-1 confirm to go bearish structure. So now we've got by 6:45, by 7 a.m. exactly. Now we've got the first 2-1 off the 15-minute time frame. So that would be, let's look at what the 1 hour looks like. So the 1 hour, on the 1 hour time frame, we had a wick to go fill now. Because price had come all the way down. We made a pullback. So this became a 2-1 confirm on the 15-minute time frame. So if the 1 hour is telling us we're going down, and the 15-minute just did a 2-1 confirm, there's your plan of action based off the higher time frame. And then you can see in that 1 hour, we went down 18 pips. Just in that 1 hour. By 8, did another pullback for liquidity, and it dropped down. And then all the way for a 10 a.m. new 4-hour candle, it dropped some more. And then it dropped some more the next hour. See how that works?
Yeah.
So my trick, if I'm trading the morning, is if 6 a.m. doesn't have confirm, by 7 a.m. I usually do. Right?
So New York is 8 or 9 for me.
New York is going to be 8 o'clock in the morning for you. New York session opens at 8 a.m. your time, and then you're gonna have that, and then but you're looking between like 8-9 o'clock in the morning.
Okay, so the 8 a.m. 4-hour candle, and I want to be worried about the times from 8, 9, 10, 11, from 8 to 11 or 8 to 12.
I mean, that whole 4 hours is big, because in that 4 hours, as you can see, for the most part, on many days, you've got any time on all those hour candles that price just continues in momentum. For the most part, the day before, we had the same thing: 6, 7, by 8, by 9, right by 10 a.m., the new 4-hour candle, it drops again. So, with my trading plan, that's in the drive, and the stuff that I'm looking for is I've got 6 a.m. new 4-hour candle. I've got 7 a.m. hour candle. I've got 8 a.m. hour candle. I've got 9 a.m. hour candle. If I don't have any trades in by here, by 10 a.m. new 4-hour candle, there will be movement / momentum for the most part. For the most part. So the way that looks, we'll do a little back test on the 4-hour time frame. So we've got, let me move these up a little bit. This is what we have here. Let me move these guys. Okay, we've got these nice zones. Okay, so this is how the 6 till 10 o'clock. This is from 6 a.m. till 10 a.m. This is how it finished off. So where's all the buying power at? There's no buying power. Clear momentum is telling us, well, we're going to continue going down. Because you can see how strong this rejection is. There's nothing holding price back from dropping some more. And then if you apply the currency meter, with the currency meter, the US dollar was still weak after news. The US dollar was weak, the Japanese yen was a little higher. So just applying currency meter with momentum, you can just get an idea of where price is at. So if I didn't take any trades in between this time, by 10 a.m. there's usually a spark in that new 4-hour candle. And in that time, profits come really quick. So here's 9:45, here's 10 a.m. Let me do a pip count. Right by 10 a.m. we already went down 10 pips in 15 minutes. Already the profit target goal was hit. But what did it do? By 10:15, it went down 13 pips. By 10:30, 23 pips. still around 23 pips. By 11, we're at 24 pips. By 11:15, we're at 31 pips. Now we're at a major support zone. You see how that works?
Yeah.
So when I'm with my trading plan that's in the drive and the stuff that I'm looking for the beginning. Let me write this down. I'm looking for the beginning of the candles. I am looking for the beginning of the 4-hour candle, 1-hour candle, etc. I am looking for momentum, currency meter to check to check the value of currency versus currency. So like US dollar versus Japanese yen. Let me just write example US dollar versus the Japanese yen. And then looking for wick fills, etc. These are like my key things that I'm looking for when I'm trading around that 1 hour and those 4 hours. Because if we clearly just follow the momentum, so by 6 a.m. if I didn't get in, okay, I wait. If I didn't already get in, which there was a couple opportunities still to get in, but by 7 a.m. I'm probably going to have momentum. So what happened here? By 7 a.m. we have a 1 hour wick fill and just follow momentum. You can just write stop loss and profits, whatever. But as you can see, in that morning time, price already went down just in 1 hour, 18 pips. That well exceeds my profit target per position, right?
Because the
Now,
4 hour was saying bearish.
exactly, because the 4 hour made such a large spike, it made such a long position, hit a resistance, and then now either we sell resistance, understanding that this is our plan of attack, because on that 15 minute we had a few things, right? We had that EMA magnet. It's pretty far away from the EMA. We've got an EMA magnet. We have price hitting a major resistance. So, and then after 6 a.m. by 6:15, price confirmed after this strong rejection. Okay, we're still going down, just following the momentum. Just by following the momentum. And in this 15 minutes, I would have already been done trading here. And that is just barely at 6:15 in the morning. So, trading less than 15 minutes for the day, and all our profit is taken per however many positions that I have open, right? But what's most important is being able to follow that higher time frame and having your own trading plan around those higher time frames. Because the way it looks is like 23 here's through London, yada yada. Okay, so here is 6 a.m. So here's 6 a.m. So if I didn't have confirm by 6 a.m., by 7 a.m. I probably did, right? Maybe there's no confirm still. Here's 8, here's 9, here's 10. Too much rallying. Too much rallying, right? You see all this rally? It was just setting up for even Asian Open. Because if you look in the drive, part of my trading plan also is if I don't take any trades in the whole morning, wait for Asian Open 4-hour candle, which is 2 p.m. my time. So that would be 1400. So by this time, through Nikki Open, we have clear momentum. The morning there wasn't so much. On the 15-minute time frame, we did. There was a clear momentum on the 15-minute time frame, and it ended up dropping quite significantly. But this example is not as good. So if we just move on, I'll go back test and I'll just show you what all this looks like. So we've got yada 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 4. Here's 5. Okay. So here's first thing in the morning. This is first thing in the morning, 6 a.m. New 4-hour candle. This one price already broke this support. It closed here. It basically closed right around this support with a wick to fill. So first thing in the morning, we have 1 hour wick fill off the 1 hour time frame, right? That was already the first thing in the morning. So these are things I'm looking for. So price goes down 12 pips first thing in the morning. This was by 6 o'clock. By 7 o'clock, it dropped 20 pips, right? And then it just continued following in momentum. By 8 o'clock, we have 20 pips. By 9 o'clock, we have still around the 21 pips ish. So what's right after 9 o'clock? We got 10 o'clock, the new 4 hour candle. So what did it do by the new 4 hour candle? It continued dropping in momentum, 46 pips for this whole morning. So what I'm looking for early in the morning are those wick fills, the clear momentum, right? Currency meter, news. I forgot to add news in. Always looking for news and following the momentum. Let's go back a little bit more and let's see what it looks like. Okay, so this is through London. 4. Okay, here's 5. Okay, this is the hour time frame. So here's by 6 o'clock. So I don't have the zone drawn up, but it did. I traded this. It did hit the zone. And then what do we have? Off the hour time frame, we ended up having a lower low. Not because see, not every day is absolutely beautiful, right? Not every single day, but more times out of less, you're going to have the setup that you're looking for. The 1 hour time frame makes 2-1 confirm to go up. We have a lowest low. We have our new higher high, higher low for 2-1 to continue going up. That was by 7. By 8 o'clock, 1 hour candle. Let me highlight this. And I'm going to go to the 15-minute time frame to see what we have on the 15-minute time frame. Okay, perfect. So even off the 50-minute time frame, we have clear 2-2 structures, 2-1 structures, etc. So here's right by 6 a.m., by 6:15, 6:30, 6:45, by 7, we make it our new high, real nice highest high. Then we just make a pullback. By 8, we finally launch, coming down. By 10, it goes down a little bit. This was just a lot of consolidation, so it wasn't as pretty. Of course, it wasn't as pretty. All the way leading up till Nikki. And then, of course, this was right for Nikki. Nikki made the choice of which direction it was going. Yeah, I mean, the cross ended up happening, but this was right after Nikki. Boom, Nikki blows down past support. Right, Nikki blows past support on the 15-minute time frame. Followed the momentum. There's no reason why price was coming up. Pretty much everybody traded this. It dropped like 60, I think. Yeah, 64. Clear momentum by here. Because Nikki is part of my trading plan too if I don't trade throughout the day. So there's certain things that I'm looking for. Let's go back even more. I'm going to go back even further. Like really far back. As far as I can go. September. Okay, perfect. August. Let's get a better idea. Let's see what happened here. Okay, this is the 1 hour candle. All right, here's through London. London was bull, bull, bull. 5. Okay, here's by 6 o'clock. So what do we know here? We have 1, 2, 3, 4, 1, 2, 3, 4. So in this time, I can already tell the 4 hour candle would have had a strong bullish push. Because you could see 1, 2, 3. All these 1 hour candles are just obviously going into a momentum, right? Price is making higher highs and higher lows, right? This is a higher low, higher low. It's just going up. Let's do our higher high now. This is our higher high because we broke resistance. We broke our resistance right here. This is our recent resistance. We broke resistance. Price comes back, makes a new higher low. right? And then it just continues. It breaks resistance again, makes a new higher high, higher low, and then it just continues in the momentum. So here's by 6. By 6, price makes a new higher low. By 7, it strikes going up. By 8, consolidates. 9 consolidates. Now the new 4-hour candle is opening. So it wasn't until 11 o'clock that it continued going. But in this time, that 4-hour candle was already telling us bull. So we would have just followed the momentum. Look back again. Okay. So this is 4, 5. Okay, so here's by 5 a.m. We've already broken all structures. I don't have any of the zones drawn up, so it's hard to see without the zones drawn up. But we've got by 5. So here's the start of the new 4-hour candle. Slight pullback. Continues momentum. We've already broken support. We know we're going down. Expect the pullbacks. So by 6, by 7, momentum. By 8, by 9, and then by 10, makes the pullback. And then by Asian Open, this is 1400 hours, the new 4-hour candle, all the way in through the Nikkei time. Here's another one. 5 a.m. here. 5 a.m. here made 2-1 confirm on the hour time frame. Lower low. Lower high. Off the 1-hour time frame. This was right by 5 a.m., right by 6 a.m. 5 a.m. already made the lower high. If you didn't take the sells in this time, we've got the momentum here now. So now we've got clear momentum. Yes, we came up for a little bit of liquidity, but we're just following the momentum. We've already confirmed that we've got a lower high. So by 6 a.m., if we didn't have confirm, by 7 a.m. we do now. And then as you can see, price dropped significantly by that 7 a.m. time. All right? Let's go back a little more. Let's see what we can find. 5. So here's by 6. Okay, so by 6, we had nothing really. Price did come down. It went up first, then it went down. Then by 7, we launched up. Now we have a wick fill. So now we have more clear momentum by 8 a.m. to go continue filling that wick all the way until 10 a.m. So 10 a.m. you would have just been following that momentum. And
So basically, I think I'm missing multiple opportunities then, since I'm not waiting for the hourly. So what I do is, if I see a perfect opportunity, like just on the 4-hour, if the 4-hour made a lower high on the 4-hour, I'll just enter off the 15-minute instead of looking at the hourly.
well, you want to be looking at the hour still, because the hour time frame is really confirming direction
Right.
like a lot of the times. A lot of the times, the hour time frame is really helping with scalping. It's really helping with momentum, because like let's look at here for example. So I wasn't trading at this time. This was really early in the morning. Actually, this is before London, so this is actually not a bad time to trade. But what do we have here on the hour? Here's our recent support. We broke support.
Mm-hmm.
You see how we break support? This was at is this 11? No, 10. This is 10 p.m. right here. This is 10 p.m. By 10 p.m. we already broke support. So what do? You just followed the momentum just off that 1-hour time frame. You can see, and the 1-hour time frame we made a lower high, right? We have lower high, lower low, lower high, lower low, lower high, lower low. Comes up, makes another lower high still, lower low, lower high. It just continues in the momentum, right? Price broke structure here. This was at 10 p.m. So by 11 p.m. we go down. Here's London Open. by London Open. Now we have a 1 hour wick fill. So you see the hour time frame is very crucial. It's extremely crucial. In coordinates with the 15-minute time frame, you can enter just off. You can many times I enter just off the hour time frame or the 4 hour time frame. Because if you're real confirmed that we're going bearish, like really confirmed that we're going bearish, based off of a specific time frame, right? So let's just say we're confirmed here by 10 a.m. that we're going bearish. So we drop down to the 15-minute time frame for an example, and we say if I'm entering my sells just off that 4 hour time frame, this is where I'm gonna put my sells here, but I'm gonna drop to my 15-minute time frame to see where those recent resistances are to place my stop loss. So my stop loss might be beyond this big wick here. Over on these wicks, I know it looks a little heavy, like 20 pips for a stop loss, but I may look like right here that, okay, this is where my stop loss is going to be. Maybe this resistance here. And then, of course, my take profits, right? Wherever your take profits are. So usually my stop loss isn't this. Actually, no, my stop loss is around that many times. Many times. Because you have to have your risk to reward. So by looking at this 4 hour time frame, comfortably can enter sells just off the 4 hour time frame, saying just to follow momentum. You can expect a slight pullback, but there's no reason why it's going to be launching up. Because everything that we check, the currency meter, news, momentum, is telling us that we're going down. So you just keep it simple. If price is telling us that we're 100% going down, we're 100% going down. You know what I'm saying? There's just, if too many things are telling us, just keep it basic. Stick to the simple. Stick to the simplicity of trading just by following the higher time frame momentum.
So in this case, on the currency meter, JPY was stronger and US dollar was weak.
Yeah, the Japanese yen, it wasn't extremely strong, but it was up here. But the US dollar was just extremely weak after news. So things to pay attention to are just understanding that while the US dollar is still really weak, the Japanese yen had some strength. So just probably just following the momentum in the way of those pairs. So another thing that I do, I don't want to confuse you too much, but with understanding like GBP was extremely strong all day on Friday. The US dollar was extremely weak after news. So if we're trading like a pair like GBP USD, we're just using that as a cheat sheet.
Bullish.
And it was just bullish. Yeah, exactly. So we've got, here's the new spike.
Damn.
Price pulls down. By 6 a.m., it starts to go back up. And then you can see all day, all it did was go bull. Nearly 100 pips, literally from 6 a.m., literally right from 6 a.m. until market closed, 2 p.m. in the afternoon. Nearly went up 100 pips. The 1 hour time frame.
Wow.
We're just creating the new structure. The 1 hour time frame broke up. Now we have a 1 hour wick fill. We already had a cross. We had a rally and a jump, right? We have momentum coming down here. Now we have break of structure. Now we have rally. We have another break by London, and just following all the way up through London. Actually, 2 days ago, it went up 150 pips, literally, in just a day and a half, just by following momentum. Now by the 6 a.m., price came down here, launched up. Now we have a 1 hour wick fill. By 6 a.m., price pulled down a little bit. That's okay. Pulled up. Now we have confirmed by 7 a.m. that we're going up. Very minimal drawdown if you entered off the 1 hour time frame. And then right by the 10 a.m., because we know that the new 4 hour candle has a jump too. So this is by 9. Here's right by 10. Boom. Right by the new 4 hour candle, just by following higher time frame momentum. So sometimes if like the euro is, because the main pairs that I'm trading are usually euro USD or USD Jappy. But you can also just use the currency meter as a cheat sheet to say, well, what's really weak? If I'm using this as a cheat sheet, I'm going for the pairs that are weak. So if the US dollar is extremely weak, then we've got GBP USD, Euro USD, right? These types of pairs. If we go to Euro USD, I didn't even look at it. Let's see. Euro USD had to have been probably bull. By London again, we already broke structure. Boom, boom, boom. 4. Here's by 6 a.m. We go up. 7 a.m. 8 a.m. makes a new higher low. By 9, the 4-hour candle was left us off with the 4-hour wick fill following momentum. What did the new 10 o'clock do? It just launched just by following that higher time frame momentum. Look at that, 80 pips in a few hours, 4 hours. It goes up 80 pips, no drawdown if you enter just off the 4-hour time frame, right? Of course, I don't have my zones drawn up. I would have needed to have my zones drawn up just so that you can have profit target, because we got to have profit target. We got to have an area of understanding when to pull out. And look at it, we got nothing holding it back. Like, it's just creating. Now, see where we have all this empty space? Now we're just going up probably up to the high side to create new higher momentum, a higher price. See where the week finished off? Well, the week finished off so bull. Now we've got, it's just so bull. We're just going to continue going up to the high side. These are our real next profit areas, is going to be up here. A few hundred pips away. It's the momentum is too strong by just following higher time frame. Sure, we might come down a little bit, but I don't really see a reason that we're going to be coming down. We've broken resistance. We hit a new resistance, and we're extremely strong. We're just extremely strong. We're going to the high side. We're creating new history. So just by following that higher time frame momentum, here's by the 10 a.m. Boom, broke resistance again, and just following the momentum. The 15-minute time frame would have had tons of noise. See, we're going up, we're coming down, going up, going down. It's just creating a lot of noise, right? Eventually prevails. But the higher time frame is always what we're using for our confirm. Because if the higher time frame is still telling us that we're going up, why would we be coming down? Like if the 15-minute time frame is confusing us, but the higher time frame is telling us we're going up, just trust the process. Just by trusting the process. Another 4-hour wick fill. Yeah. Yeah, you got to use the 1-hour time frame. You got to use the 1-hour time frame. The 1 hour, the 4-hour. Look at this 4-hour on GBP USD. We have all the way up until London. Strong. Strong. Now a new wick fill. Now we've got from 6, so right in the morning, that 6 a.m. had another wick fill, and we closed above. And now that next 10, we have more wick fill. Again, the 1-hour time frame made higher highs and higher lows. Higher high, higher high, higher low, higher high. Let me do little boxes. Higher high, higher low, higher high, higher low. She's just moving in momentum off the 1-hour time frame. The 1-hour time frame is extremely important because you got things like 1-hour wick fills. Like we got 5 a.m. We've got a 1-hour wick fill for that 6 a.m. push. New 4-hour candle following the momentum. It'll work on any pair. It doesn't matter even if it's an ugly pair like NZD USD. It's going to be the exact same thing. We're going to have higher time frame momentum. Here's 5. Now we got 1 hour wick fill by 6. Now it just continues in the momentum. Boom, boom, boom. By 10 a.m., it just goes up again. All the way until Nikki. This is literally Nikki. Then we made a lower high to continue going down. I never trade NZD pairs ever, but it's gonna work exactly the same just by following momentum. Here's by 11 o'clock, we broke resistance. Now we have a 1 hour wick fill right for London Open. Boom, London Open launches, makes a new higher low all the way until early in the morning too. Ends up making kangaroo tail, yada yada. But I'm not trading this pair. But it's the same concept, just by following the higher time frame momentum. Now we've got 1 hour wick fill for the 6 a.m. Boom. What do we got here? This was news probably. Yep, this was news. News dropped down. If we don't have any confirm, wait in the 6 o'clock time. Let's see if we got a 2-2 in the 15-minute time frame. Tons of it. So now we've got, by 6 a.m., we got major pullback. We got major rejection, makes a new higher low just to continue going into momentum. And then right by 10 a.m., the new 4 hour candle right here finally makes its jump. I'm good now. Let me see what this person's calling me about real quick. This is Kyle. No clue what that was. Telemarketer or something. So let me get off of NZD. I don't ever trade this pair. It's disgusting. But this is why we're using our higher time frames, because our higher time frames are literally confirming the momentum and the direction. Sometimes the lower time frames just have too much noise. Like if we have this much consolidation for a full day on the 1 hour, imagine what the 15-minute looks like. Way too much noise. No movement. Nothing. It wasn't until London that we sparked. This is literally by London. This is London Open here. This whole area is London. And then, of course, the little tricks. London Open is usually always bullish. So keeping that in mind helps. London is just usually always bullish. Asian Open's usually always bullish. Just little tricks to keep in the back of your mind, just to say, well, London is usually always bullish. So if we're trading London, let's see what it did. Well, we know that London has a pre-push. I like trading the pre-push. So we have higher high, higher low, higher high, higher low, higher high, higher low, and it's just creating higher highs and higher lows on the 15-minute time frame, all the way up until the open. Boom, and it launches 50 pips, literally, in 30 minutes. Well exceeds our profit target. Our profit target was taken 15 minutes into the open, 10 pips, stop loss and profit. Ride the wave.
So should I enter off the 15 or the hourly?
Whatever your preference is. See, for me, the way that I trade is the way that I trade. The way that you trade is going to be the way that you trade. So it's whatever you're most comfortable with. But what I would say is, if you understand the bias, higher time frame momentum, use the 15-minute time frame as your stop loss. So if I'm entering buys anywhere in here, I'm going to be looking at my recent support off of the 15-minute for my stop loss. So my stop losses will be around here. This is where my stop losses are.
The previous low?
Yeah, just the previous lows. Like this is where my stop loss is. This is where my take profit is. So if I'm looking at USD Jappy, same thing. Here's by 6, here's by 7. If I'm entering sells by that 1 hour wick fill, I'm probably looking at, well, this is probably where my stop loss range is going to be. Because if I enter in sells from here, my stop loss is probably going to be, hold on, right around here, around this recent. I think this would probably be a little too high. I'm looking around here. My stop loss is going to be this recent area, and my take profit is going to be down here. So risk the reward. Use your 15-minute time frame support and resistances as stop losses. Because if the higher time frame is telling us we're going down, well, look at the 15-minute time frame and put your stop loss accordingly. Right? Use the 15-minute for stop loss. Really helps out a lot with trading plan. And then, of course, paying attention if you're trading the daily. The new daily is going to open up when Asian opens. So for me, it's 2 p.m. So understanding that there's also the daily candle is going to be most effective at Asian time. It's not going to be as effective during New York session because we still have a few 4-hour candles until the Asian session opens. So even just by looking at daily wick fills, daily momentum, the new daily opens, we get momentum. So the other things to just pay attention to is those daily wick fills, falling momentum. Like on the 19th here, 1219, we end up having daily wick fill. Now we have all this open space to go retest, to go up to the recent resistances again. Just following the momentum. There's always an opportunity to trade. Just sometimes it might not be at this time, so it might just be at this time. So if you've got no momentum in the morning and you're just confused, just wait. Either wait an hour, see where price has been, or you end up coming back at that 4-hour and checking out that new 4-hour candle. So your trading plan should be based around the 4-hour time frame. In my opinion, that's just my opinion. My opinion is that your trading plan should really be based around the 4-hour time frame to get a clear idea of momentum. Wick fills. We've got those 4-hour wick fills, etc. But these are really what you got to be paying attention to are those higher time frames. The 1-hour candles, the 4-hour candles, the 1-hour, the 4-hour, and the daily are like the most important. The 15-minute, you can spot your 2-2s, but they're really important for your stop loss. Really important for stop loss. So, and then, of course, is trading plan because you've got to. You mentioned earlier that the only time that you can really get on. Well, you have to put into effect where you have to understand your own work schedule so you can say, well, if I've got this hour, this is the time that I'm trading. You know what I'm saying? And even if I'm not trading, you can always post in the chat saying what do you see price doing, and price might have a 1-hour wick fill. Price might have a 15-minute 2-2. I can just do a quick glance if I'm around, and I can say this is what I'm seeing. You know what I'm saying? So it's really important. You have to have the plan effective around your schedule. So my schedule is very flexible. All I do is trade. So for me, I've got all day long. So I'm very relaxed. I don't I don't rush the process. I've got many times throughout the day that I can trade. 6 a.m., 7 a.m., 8 a.m., 9 a.m. the 10 a.m. new 4 hour candle. I've got Asian open, London open. I mean, if I'm tired in the morning and I don't want to wake up, that's okay. By 10 a.m., I probably have movement. Like, there's just always an opportunity. There's just always an opportunity to trade. But if I'm scalping, the most important times for me to scalp are going to be the beginning of like the 4 hour candle for 6 a.m. and then 7 a.m. because I like my profits to come quickly. So if I'm scalping, I want to get in and out within 15 minutes to 30 minutes. So I already know that my 6 a.m. I'm going to have a push. And a lot of the times, because the New York Stock Exchange opens at 5:30, and that's when the U.S. dollar starts moving. I mean, the New York Stock Exchange opens at 5, and that's just when the U.S. dollar market opens. So a lot of the times throughout the week, we have news at 5 or 5:30. So for the U.S. dollar, let's see. And here, this is going into next week. So see, Thursday, U.S. dollar, you see 5:30, building permits, unemployment claims, right? So because we have news early in the morning, that means that for that 6 a.m. candle, we're probably going to have volatility for the 4 hour 6 a.m. So that's another factor in that why I like that early morning push. Here's another one, 5:30, more unemployment claims. So we know by 6 a.m. we're price is going to be in momentum. It's going to show us something. Here's another one, Friday, 5:30. See, more U.S. dollar news. The news happens when that New York Stock Exchange opens. It happens when the U.S. dollar market opens, New York session, right? So we're going to have a lot of volatility in that morning time. So even concluding with the US dollar for that morning, we have the news push, hits a resistance, ends up making a 2-1 confirm on the 15-minute, continues into momentum off the 1 hour time frame, just following the momentum, etc. For those 1 hour wick fills, 4 hour wick fills, 4 hour momentum. So you gotta if you if you figure out if you help me figure out your schedule better, I can help you develop a better trading plan for you. So if you say like I'm trading or I'm working at this hour to this hour this day, this hour to this hour this day, this hour to this hour to this day, whatever, then we're gonna say, okay, so this is what we're gonna look for. We're gonna look for this time, we're gonna look for this time, and we're gonna look for these two twos. We're gonna look for this structure. We're gonna shoot for this many pips and this many pips stop loss. And then you're just going to place your entries and your stop loss and your take profit, and you're going to let the trade ride, and you're going to challenge your psychology, and you're going to develop a better trading plan. We got to develop a better trading plan for you. That way you get more comfortable, because everything is on trading plan. Everything, like literally everything is based on trading plan, but and an effective trading plan.
See, I can only trade around New York, like, to be honest, because I get out, well, 5. I go to work at 5. I get out around 3:30 to 5 o'clock in the morning. So it's like I have like maybe 2 hours to get some type of rest and then trade and then go back to sleep.
Oh, that's rough.
Yeah.
So 10, 11, what time do you start at 5?
Mm-hmm.
So if you're asleep at 3 a.m., oh, that makes no sense because then the stock exchange opens in a couple hours. I mean, it's 5 a.m. my time, it's 8 a.m. your time. So I mean, it's a little bit better, but we gotta really base your trading plan around New York, and New York's my favorite. So I'm usually up anyways trading that time. So this is all New York session, all this, all this movement. I love New York session. It's my favorite session. Well, that's relative. Everybody likes trading at their own specific times or risks or whatever. But um, so just moving forward, um, I can send you a private message, and I will. If you look in the Google Drive and you look at my trading plan, and then have you need to, if you haven't already, you need to write down a trading plan. You got to write down what you want to do. You got to write down how you want to do it, and then this is what you're going to do every day.
Right.
You know what I'm saying? This is just, I'm Andre. I'm getting up. I say this is the time that I'm going to trade. These are what I'm looking for. I'm looking for 4 hour wick fills. I'm looking for 1 hour wick fills. I'm looking for momentum. I'm looking for currency strength. I'm waiting for news. I'm looking for a 2-2 on the 15-minute. I'm looking for 1 hour wick fill. I'm looking for clear momentum. I'm just looking for all these clear things, and then I'm just applying it simply into the chart. You know what I'm saying?
Mm-hmm.
So writing it down is important. You got to write down what you're looking for, because then this gets programmed into your brain so that when you're trading, because a trading plan that's not effective is not a good trading plan. So we got to also make sure that your eyes even see the same things. Because if your eyes don't see exactly what I see, then a trading plan that I want to help you with is not going to be the same. Because you're going to be like, well, I don't see it that way. I see it this way. So then we have to base your trading plan around how you see it. You know what I'm saying?
Yeah.
But if you're forgetting that 1 hour time frame, we need to get that 1 hour time frame in there. That's a big deal. The 1 hour time frame is a big deal.
Yeah, that's what I really want to
Yeah,
master.
yeah. You gotta try and train your eyes to see that 1 hour time frame. 100%. So let's get together again, and let's use, if you want, use my trading plan in the drive as a template for you, because a lot of the things that I covered in the Skype session are basically a lot of things that my trading plan has and what I look for. The only thing I'm missing is maybe some graphs. Maybe I need to do some screenshots and add them in there to have something to study better. But just moving forward, let's work more on your plan.
Okay.
That I want to catch 10 a day. I want to catch 20 pips a day. Like, you just start small, like 20 pips a day. If you catch 10 to 20 pips a day right now, by the end of the year, it's going to be 4 or 5 grand a day. You know what I'm saying? You start small. Even on penny lots, you're catching 10 pips a day. So you do that for a month consistently. Because the whole idea, it's not your lot sizes, it's the consistent profits. So if you're consistently catching 10 pips a day, 20 pips a day on penny lots, and then you go up to mini lots, and now you're doing dollar amounts, it doesn't matter if you're only making $3 a day, $5 a day, $10, $20 a day. The next thing you know, in 6 months from now, it's 5 grand a day, 10 grand a day, 20 grand a day, 30 grand a day. It's just the consistent profits.
So it's all that psychology.
It's just all psychology. That's all, everything is just based around your trading plan. It's just based around what you're looking for, what you're going for, how many pips you're going for, what you look for. And then the next thing you know, it's like I'm consistently catching 10 pips a day on pennies. Okay, you do that for 30 days. Okay, sure, maybe you're only making like 30 bucks, whatever, but it doesn't matter. What matters is the fact that you can't rush the process. And by not rushing that process, you're at 10 pips a day. The next thing you know, sure, you've only got that 30 bucks, but then in 6 months from now, it's 30 grand. It's 1 grand. It's 2 grand. But you've got to don't focus on money, just focus on consistency. Because if you just trade on pennies, it'll help with your psychology a lot. Because you're like, I'm risking, I'm risking 10 cents a pip rather than you're risking like $1 a pip or $5 a pip on like a .5 lot, right? If you're risking like $5 a pip and your account's only at like $100, well, if you go too much in the negative, your whole account's gone. But if you're on penny lots and you're opening up 4 entries, 2 entries with a stop loss and a take profit, and you're consistently catching that amount every single day, that's what you want to be looking for. Is just the consistency. The lot sizes, all that stuff comes later. Who cares? It doesn't matter what anyone else is doing. Doesn't matter what I'm doing. Doesn't matter what anyone on Instagram's doing. The only thing that matters is what Andre's doing. That's the only thing that matters. What Andre's doing. It doesn't matter if he's trading on .01 lots. If you're consistently trading .01 lots every single day, and you're catching 10 to 20 pips, 30 pips, whatever a day, you're already better than 95% of traders. Then you just get more comfortable and you start upping your lot size a little bit. Now maybe you're at .02 lots. Then maybe you're at .05 lots. Then now maybe you're at .1 lots. And then I'm telling you, the next thing you know, a year from now, you're going to look back and you're going to be like, wow, I'm glad that I just followed my trading plan. Because then once you get a few grand in your account, even 10, 20, 50 grand in your account, and you're able to flex a little bit more with your trading style, you're able to increase those lot sizes, maybe even go full margin a few times. The next thing you know, you go from 50 grand to 200 grand in one trade just from going full margin. You know what I'm saying? And then you're just able to balance out a lot better. You're able to just to balance out, I mean, your lifestyle, your trading plan. Because I go outside my trading plan sometimes. If my trading plan is only to open up 4 entries, but I open up 10 entries, it's going outside my trading plan, but it's the same analysis. I'm just going for a little bit more money. So I'm just changing that trading plan for the day. Sticking with the same things that I look for, but maybe different lots. So let's just focus on that. Focus on if you just send me the days that you work and the times, we will develop around those time frames what you see better, so we can make a good plan for you.
Okay.
Sound good?
Yeah.
Word. I got a funeral that I got to go to today, unfortunately. So
Sorry for your loss, man.
no, it's all right. It's all right. It was a close friend of the family's um, husband. So it's it's okay. Yeah, it's sad, but I mean, the point. Sometimes in life, man, it's better to die. Like when you're suffering from cancers or other sicknesses, it's like, God, take me home. You know what I mean?
Right.
The man who had passed away, very very close to our family, but um, it's better for him because he was just suffering way too much. So, but I appreciate that. Thank you. So, but I recorded our one-on-one, so I'll upload it into the drive, so it can just be more things to study.
Okay, cool.
Sound good?
Yep.
So, moving forward, let's just stay positive and just keep your eyes on those charts. You got to have chart time too. Don't forget chart time. Spending time in the charts, looking at the charts, looking back at the charts, simulator if possible. You know what I mean?
Right, right. I gotta get a simulator. I got a MacBook, so it's like I don't
Yeah, I got
know.
a MacBook too, so I don't use simulator. But maybe we can schedule certain days in the week where us as a whole group we can use simulator on someone else's account.
Right, that'd be dope.
So a lot of guys have simulator, so we'll just use their simulator, and they'll just control it, and we'll talk. So just hang in there, bud. You'll crush it.
I am.
All right, Andre. I'm gonna close shop.
All right, thanks,
All
man.
right, buddy. No problem.